Yo, what's up, YouTube? Welcome back to another episode of KJD Investor. This is yours truly, KJ. Without further ado, let's hop into the portfolio. Okay, guys, after a couple of days of red in the portfolio, as you can tell right now, looks like we got some green going on. Right now, the investing account sitting at $62,413.30. We're up today $306.59, or 0.49%. Buying power is $430.09. And we got cash earning interest on the $430.09. We got our crypto holdings. Not much has changed there. Now with our ETFs and stocks, guys, we had a couple of earning calls today. We had Google earning call today. They beat expectation by a little over 1%, a little below 1%. As you can tell, Alphabet Class A dropped today. It went to $191.75. It dropped $14.38 in the aftermarket, so what it normally was. Earlier, Apple was, what was it, 200? Yep, 206.30. But now, like I said, after the market, after the earnings call got announced, it went down. Same thing, Alphabet Class C, $193.48. Also went down $14.28, $14.28, or 6.87%. I got 4.9 shares of that. Market value is $952.43. Average cost was $180.20, and I had total return of over $65.40. So not bad for Google, even though they did beat top line. They missed on revenue and some other key elements in their earnings report, which caused them to fail. What else we got? We got Microsoft sitting at $411.50. Microsoft, guys, it also sold off from the other day. I got 3.70 shares of Microsoft. Market value is $1,524.98. Average cost is $411.89. And total return is a negative $1.46. And guys, I've had Microsoft since last year. OMG. I've had Microsoft since last year. And the average cost has never came back down to my original price where I bought it at before. Not until now. Microsoft is $411.50. It was up a little bit today, but tonight it came down. It sold off a tad bit by 0.20%. Microsoft, another company in the Mag 7, is on sale right now. If you ever wanted Microsoft at a good price, I think right now would be a great time for you to get it. Amazon sitting at $239.39. It was up today almost 2%, or $4.67, but tonight slightly sold off, $2.70. I got 3.93 shares of Amazon. Market value is $941.50. Average cost is $167.48. And today I got total return of $282.82, or a 42.94% increase. Guys, anything over 8% was getting rich. Right here, you see with Amazon, we're up almost 43% on the dollar. So another one of those Magnificent Seven companies that's really a heavy hitter for growth in the portfolio. So if you're looking for growth in your account, in your numbers, consider Amazon. Now, I'm not saying that's financial advice, but I'm just saying that's a company that I look to also to multiply my income as well. Next up, we got Apple. Apple's trading at $232.66. Apple was up today $4.78, or 2.10%. Today is sold off slightly by 0.06%. I got 22.29 shares of Apple. Market value is $5,188.04. Average cost is $176.45. Total return $1,253.42. I'm up 31.86% in Apple. Apple is another one of the Magnificent Seven companies. Apple hasn't had its earnings report just yet, but when it does, I'll be bringing that live update to you. Excuse me. Sorry, guys. It's been a while since we reported on this company right here, but as you seen right here, this morning Apple was trading below. It was at 227. Now, all of a sudden, today, Apple went to 232. So, a big jump increase in the company. Maybe some good news happened for Apple today. I know they've been having issues with the China market and the Apple, the cell phone to sell over in China, but it's actually working out good for Apple right now. Next up, we got SCHD, the Schwab U.S. Dividend Equity ETF, is trading at $27.76 at the close of the market today. I got 237.88 shares, SCHD. Market value is $6,603.78. Average cost is $26.30. Total return is $347.46, or 5.55%. This is not meant to grow. This is not meant to be made for growth. This is the defensive player of the ETFs. Also, the stable dividend of all the ETFs. We got SCHD for that, rounding out our first ETF of the 3-fund portfolio. Next up, we got Walmart. Walmart is now trading at $100.96. It was up on today. I have 110.98 shares of Walmart. Market value is $11,204.60. Average cost is $57.92. And we're up total return of $4,776.63, or a 74.31%. Guys, this stock, Walmart, is a value stock. It's not even a growth stock. But the growth in this company has been exponential, like just amazing. And Walmart continues to soar. It continues to define the odds. It continues to make money. So I'm going to continue to buy and hold and invest in this company. They got strong principles of making money. Their e-commerce business has come along very, very good. They're good at the brick and mortar business. You already know that means just having a physical building to go to shop. And so Walmart going to continue to dominate in the space of retail. So that's Walmart. Next up, I want to talk about was SPLG. SPLG is my SPDR portfolio S&P 500. It's trading at $70.56. Down slightly tonight by 0.22 cents or 0.31%. Okay. I got 208.57 shares at SPLG. Market value is $14,716.74. Average cost is $63.59. And we have a total return of $1,454.19, or a 10.96% increase. Y'all, if you guys know my 3-fund portfolio, SCHD is the defensive side, my dividend ETF, but my SPLG is my foundational ETF. This thing, I don't have to be the expert. I can let this stock right here, this ETF, pick the 500 top companies in America. I don't have to be the expert. They do all the ETF is the expert. They do all the picking. They do all the selecting of which company stays, what company goes. And SPLG is just a great foundation for, like I said, just a great foundational ETF for me, for my portfolio. The S&P 500 represents the broader stock market, and it represents how the companies are doing as a whole in the market. I will continue to buy and hold and continue to add to the SPLG. That's where most of my investment strategy was once going. Okay, next up we got FTEC. It's the Technology Index ETF, the Fidelity Information Technology Index ETF. At that is trading right now is $180.43. It dropped this evening. Why? Because you had a lot of tech companies reporting. We are in reporting season, earnings season for a lot of companies. AMD reported and their stock price fell. Google reported and their stock price fell, even though they beat expectations, but they did not beat expectations by a lot. So their stock prices took a plummet, and this ETF tracks the technology sector, so it also plummeted. And it was some more companies that has reported here lately, and like Palantir, but Palantir actually went up. And will be more information on that in a few minutes. All right, so let me switch it back to this. All right, $180.43. I got 12.79 shares of FTEC. Market value is $2,307.95. Average cost is $171.95. Total return is $108.52, or a 4.93% increase. FTEC is the growth. This is the ETF that's known for growth in the 3-fund portfolio. You got SCHD is going to be for the defensive and the dividend payer. You got SPLG, that's the standard. That's like the foundational ETF. And now for growth, you got FTEC, which is the Fidelity Information Technology Index ETF. Y'all, this ETF is at a great price right now. For me, $180.43. Came back down. Earlier, it was in the 183 range, 182 range. It dropped today. A lot of the tech companies have taken a hit because of the news that President 47, I call him President 47, was going to put tariffs on different countries and things like that. But the tariffs for Canada and Mexico ended up getting paused or postponed for like 30 days because those countries decided to address the concerns that the president had, and they decided to align up with the requirements that he had for them. It's just Canada. China, I think it is. Yeah, China. They are still the only ones not really adhering to his requests as they continue to press these tariffs on different companies. But anyway, excuse me. Anyway, sorry about that, guys. Man, my nose draining, and I'm sorry. But anyway, FTEC right now is at a pretty good price discount, dip season, so to speak. Great opportunity to buy some at a discounted price, and I will continue to buy and hold FTEC because for the long term, last year it returned at a 33% increase. The ROI of money. Next up, my fourth ETF, which is just like a bonus ETF for me, is my iShares Core Dividend Growth ETF, DGRO, sitting at $63.57. I'm up in that position slightly of today. I have 74.41 shares of DGRO. Market value is $4,730.50. Average cost is $56.78. Total return, $505.27. It's 11.96% increase. Guys, this ETF is a good ETF to have. That's for me, because it's just like an extra little boost in my gains right now. Look at market value is $4,730.50. I've actually considered selling DGRO, taking the money from it and also the profits, excuse me, and putting it and redistributing it into other ETFs or other stocks. You guys let me know in the comments below what I should do with DGRO. But as for now, since it's doing so good, it pays out a good dividend, and it's also good in growth. So it's a hybrid type of ETF. And I'm enjoying the dividends and the growth out of DGRO. So we're going to continue to buy. Well, we're going to continue to hold for now. We haven't bought a lot of DGRO in a while. We're just going to continue to hold. And let's take a look at Nvidia. Nvidia is trading at $119.15. It tried to make a turnaround today for the good. It came back up to 119. I got 54.71 shares right here. Market value $6,519.85. Average cost is $118.26, and total return is $48.74 or 0.74%. It feels so strange to say that because Nvidia has been such a banker of a company for so long. And in my other portfolio, I got another 150 shares of Nvidia, where the market value, where I actually got like an average cost of $109 over there. So, excuse me. I have a blended average cost right now, probably between they're probably about $110 or $112 per share average cost. And right now, Nvidia is back up to 119. So that's kind of where it was last year, this time when the stock price actually split. So not a lot to say about Nvidia. It's kind of like you kind of broke even though by the end of the year, last year in 2024, Nvidia had got itself up to 150, 151 a share. And all I'm waiting on is for it to get back to that point, and I'm taking profits. I am definitely taking profits out of Nvidia. Why? Because I've had a big interest and a big investment in that company. And for whatever reason, people were betting against the stock as last year, like when Nvidia come out with great smashing earnings reports and things like that, instead of letting the stock go up naturally like it's supposed to, we got big hedge fund managers and we got other people with options trading. They're actually betting against the stock of Nvidia. So it causes the stock price to drop down when the earnings reports would come out. So with that being their strategy, now for me to make more money, I got to change up my strategy, which is instead of just buying a whole long term, I'm still going to buy a whole long term, but I'm also going to be buying in and selling this thing as it reaches the height again, like 150, 151. Once it reaches those heights again, and I'm taking my profits to realize my gains. And when it drops back down to this same price again, 119 a share or whatever, I'll buy back into the company. That's my goal. That's my strategy, because that's what they've been doing. So I got to do what I got to do, y'all. Meta, we got Meta Platforms sitting at $701.38. Meta slightly down on tonight, but it's still up. I got 2.53 shares of Meta, $1,777.62. It's the market value. Average cost is $509.94. I got a total return right now of $485.20. 37.54% increase. Y'all, Meta just had an earnings report the other day. They smashed it. They simply, absolutely smashed it. Meta went through the roof. These last 3 days, Meta has been up and away. I believe, like I told you earlier this year, guys, I believe Meta is due for a stock split coming up this year. I'm going to continue to buy and hold into Meta because it's a great company. It's one of those companies that would definitely multiply your income to be able to give you that 20 to 30%, 40% return a year on your money right now. And Meta just continues to, it's not just a cloud-based service, but Meta is a platform-based service. Is the likes of Facebook, not Amazon, but Facebook and Instagram. That's what I meant to say. Instagram and all the social media platforms, WhatsApp, things like that. The Meta platforms is Mark Zuckerberg has done his thing to actually to grow this company, multiply this company. It has like 1/3 of the world population on it every single day in order to use the programs that Meta has. Man, right here, the traditional IRA sitting at $41,499.85, slightly down on tonight. Buying power is 2607, 24 cents. Here we go. Same thing with the Nvidia. I'll just show you that just to let you know what it looks like. 150 shares. Total return is $1,381.16. I'm up 8.34%. Y'all, that number used to be over 6,000. So you see why I would say once it get back to where it was, I'm going to take some profits from it because that number was up there. We got Costco sitting at $1,022 a share. Costco went up today $15.66 or 1.56%. Oh, that's great. I got 4 shares of Costco. Market value is $4,088. My average cost was $933.69, and total return right now I'm up $353.24 in Costco, or 9.43%. I knew it would rise back up, guys. I knew Costco wouldn't let me stay down for too long. $353 is the return right now on Costco. So I'm gonna continue to buy and hold Costco for the long term until it gets where I need it to be. AMD guys has dropped even more. Like I said, they had a earnings report where they slightly was up just a little bit, but they did not. They missed on some revenue opportunities. AMD is at 109.14. I got 15 shares of AMD. Market value is $1,637.55. Average cost is $119.07. And I'm down right now $148.80. I really should have parachuted out of this thing earlier, but it never reached the level to where my return could break back even. So what I'm going to do with AMD, guys, is not take a loss. I'm just going to hold for now until AMD comes back up to my average cost of the 119. And once I get over that and get to the point where I can have a profit in AMD, I'm going to parachute out this thing and keep it moving. I don't even want to go through Luminar Technologies because it's still down to $5.56 per share, which is what it was for a long time, and I didn't know. I kind of got hung up in Luminar Technologies, and we're taking a loss right there as well. The last two I want to talk about before I get, MicroStrategy right now trading at $344.79. I'm actually up in the position slightly. I got 10 shares for market value of $3,447.90. Average cost was $297.14, and I'm up $476.50, or 16% in this position. MicroStrategy based off of the Bitcoin. So the more Bitcoins the higher the Bitcoin price goes up, the higher the MicroStrategy stock goes up. Next, we got PepsiCo. PepsiCo just had an earnings call. They beat expectations by 1%, and their stock price fell to the ground. $6.77 is how much it fell. Right now, PepsiCo is sitting at $144 even. I got 15 shares of PepsiCo. $2,160 is the market value. Average cost is $146.85. And we have a total return right now of negative $42.75. I'm down 1.94% in this position, but I'm prepared to hold until this ETF turns it around. This is the third earnings call in a row that Pepsi has had a negative effect on the stock price as they announce their earnings. So once I get my footing back with PepsiCo, it's known for the dividends. I'm waiting on the dividends to pay out anyway because they got a pretty good dividend. But other than that, I'm going to get my profit out of PepsiCo, and I'm going to parachute up out of that thing. Next up, last thing for the day is Palantir. Palantir Technology is trading at $103.36. It's up on today of $20.09. Palantir Technologies has all the makings of being the next super stock, the darling of Wall Street, or whatever you want to call it. Palantir had an earnings call yesterday that just skyrocketed the stock to the moon. I got 16.73 shares of Palantir. Market value is $1,729.88. Average cost is $67.83. I'm up today in this position $328.37, or 23%. And total, I'm up $594.59. 52.37% return on investment. Palantir is crushing the game right now. And when I bought Palantir, guys, I thought it was just going to be a short position. I wasn't going to be in it for too long, but it actually turned out to be like a banger of a position. So I want to actually make this into a long term. It's not a Magnificent Seven stock, but it could very well, it should be. And it's going to be in my portfolio for years to come if they continue doing how they're doing. Like I said, I got over 16 shares right now, and I'm looking to get that number on up because I know Palantir is one of those companies that's not going to wait to multiply your money. You go ahead and Palantir is one of them things that's going to go ahead and get you where you need to be. And I'm going to continue to buy and hold with Palantir. Well, that's it for now, guys. This has been another great episode of KJ the Investor. I hope you guys have seen some things that you like, some things that you didn't like, and whatever you want to talk about, you know how I do it. Drop it down in the comment box below. We'll go ahead and go over it. I know it's been a while since you got a video from me. Guys, I've been working extensive hours. It's been grueling right now. Things have been going on. Tax season is upon us, and we're just trying to survive, man, make ends meet. And as you already know, I got about another $9,800 in the Fidelity investing account, still over there investing and growing as well. We're approaching our $10,000 goal in that one, and we're going to continue going past that 10 to 20 as soon as we hit it. We should be hitting that this week sometime. And then also, guys, we just want to continue to make good decisions and good choices with the investing account, the IRA account, continue to grow our Robinhood portfolio. So any kind of questions, comments, concerns, please drop it down in the comment box below. Until next time, this is KJ the Investor signing off. Peace.